Beautiful space. Thank you, Bree and Brian, Buckley, and Jennifer and Alicia. It's a beautiful space. We're going to see, the landscape of Northwest Arkansas from here. So appreciate that. Today, if it's your first time being at the meetup, this is actually our 12-month anniversary. Great anniversary of the meetup. I was looking at kind of how many people attended. We had about 100 to 120 people, unique individuals, has attended our meetup through our signing sheet. So if you have not checked in, make sure you're signing there. If the QR code doesn't work, just write on the back of it, so we make sure we have your contact information for the future events. So we started this meetup, Brian and I, just because we have so much growth in the area in Northwest Arkansas, especially in the commercial real estate space, but there's not a community for us to learn and grow and network together. So we started that. So kudos for Brian for bringing a lot of great speakers as well and leveraging his network. So today we have actually a great speaker I'm super excited to introduce, but I'll pass the opportunity to Brian. Real quick about me, I forgot to introduce. My name is Micy, M-I-C-Y. I've been in Northwest Arkansas for about 8-9 years, on and off. I lived in Chicago for a little bit. When I moved back in 2019, after seeing the growth in the area, I started in commercial real estate just a couple of years ago, mostly doing passive investments and then active investments. Right now we're launching a fund, as an example, to help more people passively invest into commercial real estate. Just remember that you don't always have to try to work through the complicated process of being an active investor yourself. There's many ways to be part of the deal and grow your freedom as well. Outside of that, we just closed on a 30 unit a little bit earlier in the summer as well. So that's just my background, and I connected with Brian through a few meetups, etc. as well.
Through our mastermind as well.
Yeah, and our masterminds, and Brian is definitely a great resource as well. And today here, there's a lot of great sharp minds, so we'll definitely have living with networking time. Feel free to take advantage of that. I think we're good to
I'll give you guys my background and kind of how that ties into how I met George and eventually became a partner at Elevate. So some of you guys know my story, some of you may not. So 6.5 years ago I got started investing in real estate and single family space. I had a single family in Springdale. No horror stories, anything like that. I just knew that it was going to take way too long to build the kind of generational wealth that I was really trying to build, and I bought a 12 unit. Mr. Chris Vega helped me put that one together. That was my first 12 unit. Then I bought a 20 unit and another 12 unit. Built a portfolio of about 100 doors with no investors, no partners. And then I partnered up with my father-in-law, who's also here, on about 500 more doors, ranging from 12 units to 82 units, from Rogers all the way to Fort Smith. And I started to run out of doors, and I knew I was going to have to either stay in Northwest Arkansas and stay in commercial real estate, or stay in multifamily and look at other markets. And for me, I really believed in multifamily, and I wanted to locate another operator that I could bring value to. So being in Northwest Arkansas, I really liked the Texas market. I started to see George kind of come up on social media, and they were at Elevate was at a couple thousand units at a time. And what really drew me to Elevate to kind of co-partner on, at the time it was just Wagers Capital. I had a couple hundred units before I even had a business card or a website. My wife helped me put that together, but it was Wagers Capital, and I approached George. I really liked what he was doing with the construction side. For me, it was really important to partner up with a multifamily operator that had experience in construction. For me, I had done all the 600 doors, but I was looking to work myself out of the property management, out of the construction management. I wanted to just focus on equity. So I saw what George was doing in Dallas, super transparent. So I reached out to them to see if there was any way to partner up, and we ended up partnering up on a 125 unit in Irving, Texas. I raised, I think it was like $525,000 for my first deal with them. And then we did a Houston 446 unit, then I raised a little over $1 million, and then we did a deal in Columbia, South Carolina, raised a couple $1 million there, and the partnership grew, and he went above and beyond what said he was going to do. I started to go above and beyond, and I again approached them and thought, why are we just doing these kind of one-off partnerships? We should look at merging, and that's exactly what happened. About a year ago, I became a partner at Elevate, through Wagers Capital to the side, and just went all in on Elevate. So now we're at over 5,000 doors across the country, growing our footprint here in Northwest Arkansas. Really, we'd buy everything in Northwest Arkansas if we could, but not everything makes sense here. So, growing. We're going to close on a deal in South Dakota on Friday, 278 unit there. But really excited to introduce my partner and CEO of Elevate, Jorge Abreu, who also has the construction company. So let's give a welcome to Jorge Abreu.
Thanks, Brian. We're happy to have you here. All right, so how's everybody doing? Good? Hanging in there? All right. So I'm going to go, the topic Brian and Missy wanted me to talk about was construction management, so I'm going to go pretty deep into that. So if you want nothing to know about construction management, now's your time to leave. But yeah, it's packed with a lot of information, probably more content than it should on some of these slides, but I'm going to share the slides with you if you guys are interested, so I'm going to move through some of it pretty quick. What I'm actually going to cover with you guys, so I'm going to go a little bit about myself, and then I'm going to go into, before I get into the construction part, I want to explain what a value-add deal is. I don't know how many of you know what that is, but that word is thrown a lot, or that term is thrown around a lot when it comes to multifamily, value-add. So I'll go deeper into that and what it means, and then I'll go into the construction part and how to properly manage a large construction, renovation, or new construction. And then I've got a couple bonus things, depending on how long it takes me, that I'll go through as well. If you want to get the slides, so there's my email. Go ahead and email me, ask me for the slides, and I will send them over. So a little bit about myself. I'm really, really passionate about investing in real estate. Been doing it for 17 plus years now, full time. Graduated with an electrical engineering degree, but while I was going through becoming an electrical engineer, I knew I didn't want to be one. I just did it to get a degree because my mother made me. But that whole time on the side, I was doing real estate, and that was where my passion was. So I finally started doing enough to where I quit, at that time a W-2, working in an engineering department for UPS, and started in the single family space, started doing a lot of fix and flips, started to build a rental portfolio, started doing some small multis, and 11 years later of doing all that, I'd kind of stretched myself way too thin. I had started the construction company as well, had a roofing division within the construction company, so there was a lot going on, and I had felt like I hit a brick wall and I couldn't really scale that anymore, at least the single family part or those small multi-family, and that's when I got introduced to large multifamily syndications, and that was about 7 years ago. So I started really learning how to do that, and because when you compare single family to large multifamily, it's completely different. Single family home is valued essentially by what your neighbor can get, right? Your comparables is as good as it gets. When it comes to multifamily, it's a business. So if you can make that business more profitable, then that multifamily property is worth more. So I fell in love with that concept, and I went all in. I transitioned my construction company over to doing just multifamily and commercial, and I never touched a single family home again, except for my own, and that's it. So since then, I've acquired, with my company Elevate, over 8,000 doors, currently have 550 million under management. We've got assets in Texas, Oklahoma, right here in Arkansas, South Dakota, South Carolina, and Florida. We started off, really leveraging the construction company and going after heavy value-add deals, meaning they had, a large renovation component to it. Since then, like in the last 2 years, we've started mixing it up more with A-class products. We've bought deals straight from developers. We've straight partnered with developers to actually build the projects as well from the ground up. And we've been really successful in that space, so we'll probably continue to do that. And overall, I do all this because of that picture you see right there, my family, and I want to leave something behind while I'm gone, so yeah, that's my motivation. Vertically integrated. So Brian had mentioned, how we're vertically integrated, and that's the reason that he was attracted to Elevate. So one thing I learned early on was hiring a third-party construction company, hiring a third-party property management company. It can only work for so long, and you can only push your income so much when you're counting on those third-party companies. So, you know, the construction piece, I had already brought that in-house, and then the management piece is more recent. We did that maybe a year and a half ago. So yeah, we're fully vertically integrated. We can control pretty much every aspect. This is some of the team you see here between the Elevate Commercial Investment Group, which is our real estate firm, and then we've got Elevate Real Estate Management. Did I say that right? Yeah. And we've also got the construction arm. A little bit about J&T Construction. So full service multifamily contractor. We can manage pretty much everything there is for renovations. We also do ground up, and we can pretty much go anywhere in the nation at this point if the project is big enough. Some examples of, you know, we really like to make a difference on the exteriors. That's curb appeal. That's what gets your residents to actually get down and take a look at your units. So as you can see, you know, big difference there. Same with this one. This is that 125 units that Brian talked about in Irving. Here's another one. This is a ground up deal we did we sold it in 2021. So yeah, this was interesting because we're finishing it during COVID. But nice looking project. I've got several pictures here. I'm not going to go into too much details, but that was the largest ground up project we've done. All right, so what is a value add deal, right? So like I mentioned with multifamily, if you're able to increase the income, then you increase the value. So really all that means is a value add deal is a deal that you can purchase and increase the income, whether you're lowering the expenses to do that, so the net operating income. If you can increase the net operating income, to me that's a value add deal. It doesn't necessarily have to be an older property that's falling apart or, you know, something that's been fire damaged. It doesn't necessarily have to be a heavy lift to be value add. But I have an example here. So using a 5 cap rate, every dollar you add to the NOI equates to $20 in value. So just think about that, right? You know, I have another example down here, which is more realistic example. So you add $100 to the rents for a 100 unit, and you add $100. That's $120,000 per year that you added to the income, which equates to $2.4 million just by adding $100 to the rent. So yeah, one of the reasons to do value add deals and why we like going after value add deals, one, it allows us to be able to force the appreciation of the property. So versus just kind of sitting back and waiting for the market to appreciate, you can actually force it and force that value to go up. You know, an example is just, easiest example is under market rents. You can possibly add some more units. We've done that a lot of times where they're using units for storage, or they're using it for a leasing office, where we'll come in and, you know, put those back online. And yeah, overall, you know, having a large value add component in your deal, it allows you to kind of control the market and be able to, like I mentioned, you know, appreciate it, force that appreciation. So some examples of some value add deals. There's one that I call the cookie cutter value add deal, where let's say it's a little bit older property. I mean, it doesn't even have to be an older property, but where the units are clearly under market rents. So you're going to come in, you're going to raise the rents, possibly maybe upgrade some units. Ideally, maybe you do 50% of the units, so that way when you sell, you leave some meat on the bone for your buyer. That would be your cookie cutter value add deal. You know, those are probably the easiest to do, but also the prices begin to come up, and it gets harder to find these and buy them at a good price, in other words. The deep value add deals, usually you can buy these at a good price, but it's going to have a heavy construction part to it. It's going to have more risk, right? More return, but more risk. Yeah, that's pretty much value add. And then you got your new construction, right? The most value you can add to any deal is actually building it, right? So, and then you got conversion. So we do have a deal that we're converting in Jacksonville, Florida. They're hotels, and we're converting them to multifamily. That's kind of, before you get to new construction, you can do a conversion. Quick case study. So this is a deal we bought in Augusta, Georgia. We acquired it in February 2021 for $50,000 per unit. Business plan was to, and this is kind of what I call that cookie cutter value add deal. Business plan was to redo the exteriors, really change the curb appeal, rebrand it, and then just do 25% of the interior units. We had $1 million in CapEx to do that. Closed on it, got to work right away. In 6 months, we had completed everything, as you can see in the pictures. And we were able to execute the business plan on point, and then we sold it literally 1 year later for $104,000 per unit, which gave our investors over a 2x. It was a 2.2x equity multiple. And then here's just some examples of other ways to add value. So it doesn't always have to be under market rents, right? Some of them, I'm not going to read them all off here, but washer and dryer connections is a really hot one. Whenever we can add those, especially in older properties, we can get a premium for that. Storage units and bike storage, especially here in Arkansas. I think you have to provide bike storage. That's what I read today, actually. But collecting fees, that's just doing a better job in management, right? And actually collecting the fees that you're supposed to be collecting. And then there's also extra fees, covered parking or just assigned parking in general. We've had great success with internet packages so we look, we really try to maximize the NOI and look at things that our residents are already paying for, and how can we get in there, add some value, and also get some profit sharing. So internet package is one. We can get them a better deal, and we can also get profit from it. Another one like that is renter's insurance. So we required it already from all our renters. So now we actually supply it, or we don't supply it, but we can't tell them they got to use this certain renter's insurance, but we can tell them, hey, it's this easy, just use these guys. And then we get profit sharing. And a couple others there, but I think you guys get the point. There's a lot of different ways to add value to the properties. Okay, so now I'm going to get to the construction part, now that I've somewhat explained the value add component. So the problems you run into doing a heavy value add deal, or just doing a large renovation in general, right? Labor shortages, increasing pricing on labor, especially depending on the market you're in. The smaller the market, the harder it's going to be to find good labor. And I guess you could say that the hotter the market, so like this market here, you've got a lot going on, a lot of construction, it's going to be hard to find good labor, or even affordable labor, let's call it. The increasing price of materials, it's definitely come down from the peak it was at. Supply chain has gotten better, but there's still issues there. You still got to order stuff ahead of time to make sure you don't skip a beat, and definitely got to be on top of it. And then actually delivering on time and quality control. The on time, especially on your interior units, the longer they sit vacant, the more money you're losing. So delivering that on time, a lot of operators have issues with that. And then having some quality control in there too. I mean, you don't want put all this money into these units and then they look horrible. And then overall finding reliable and honest contractors. Now, the things you got to think about when you do a large renovation is who on your team is going to actually manage the CapEx. Do you have anybody part of your team that has experience with that and can handle that? And if the answer is your property management company is going to handle it, that's a hard no. Like, you're gonna fail, 100%.
That is it.
So yeah, one thing you can do is partner with somebody that has experience in doing that. You know, I like to say that you owe it to your investors to actually think about these things and to be able to deliver the business plan. Like, bad operators got saved by a really good market in the past years, and that's not gonna happen anymore. You know, I think everybody knows where we're at right now with the market, and you've got to actually be a good operator when it comes to multifamily. So here's an example. This is, I'm going to kind of walk you guys through our process when we're looking at deals and from beginning to end as far as the construction goes. So before we even step foot on a property, you know, if it gets to a certain point where we think, okay, this might pencil, we've maybe done some really rough numbers, then we start asking these really detailed questions to the broker, or, you know, if we're talking straight to the owner. And you know, I'm not going to go through every single one, but essentially we start asking them about the condition of the property, the big ticket items, you know, the roofs, the HVACs, water heaters, chillers, whatever the systems are. The units, we really want to get a good idea of what we're dealing with on the units, as far as classic, if they've ever been upgraded, what kind of upgrades. And that all helps us when we're coming up with our number for the construction. So this is a long list. You know, this is, once again, if you guys email me, I'll send you not only the slides, but I'll send you these resources as well. There's a couple of them in here. So yeah, asking about the roofs and whatnot. Some really high level, you know, I don't even know if this is useful. This is very, very high level, but once again, this is before even stepping foot on the property and just kind of coming up with some rough numbers. This is saying, you know, put $6,000 per unit if the units have been recently renovated and there's not a ton of deferred maintenance. In other words, the property's in pretty good shape. You can use $6K per unit as a rough number. If you're needing to do some renovations on the interior units, you've got some deferred maintenance that's pretty obvious, then shoot for about $8,000. And then if you've got a lot of renovations to do and it's clear that nobody's been taking care of that property, $14,000 per unit. This is going to vary between property class, location. That's why I'm saying I don't even know if it's useful, but at least it gives you something. And then you would, you know, after asking all those questions and putting those rough numbers together, you know, we would do some type of high-level underwriting and see if the numbers make sense at that point on the high level. If it does, then we would continue to do a property tour. Now we're actually going to go put eyes on the property. This is another resource I can give you guys where it goes through and lists everything that we actually look for when we go to these property tours. So, you know, we're not just going to the property tour to check the box and let the broker know, hey, we did the property tour. Like, we're actually going and looking at things and taking that really rough CapEx that we started building, that scope of work, and making it even better now as we go. So yeah, I'm not going to go through all these items here, but you know, you're looking at all the major components, taking note, asking questions. Just a little tip here, but usually when you go to see a property, a lot of the times they'll send you the maintenance manager to maybe take you around, and they are great for asking questions. Like, they, for the most part, I would say 90% of the time, they're 100% honest with you. Like, and they'll tell you everything, you know, so ask good questions. You know, I usually ask, do you have backups in your sewer? Do you have any roof leaks? And you'd be surprised what they tell you. Same thing, so this property tour continued. Some more things to look at. I need to update these numbers for sure. These are older numbers. This is from an old slide. So I even have down here, increase these by 20%. Yeah, those were pre-COVID numbers for sure. But yeah, just to give you an idea of some of the, and I've also got, I'll share a spreadsheet with you guys too, if you email me, that has better numbers in it. And then, so when you come back from that property tour, at least what we do is we would then take out that CapEx again and rework the numbers, and now it starts to get a little more detailed and more specific, right? And maybe 90% of the time our final scope ends up being pretty similar to this, you know, minus maybe some things we found during our due diligence. And that's just, yeah. And speaking of due diligence, so the next step would be, you know, once, sorry, I skipped something there. So redo those CapEx numbers, plug them back into your underwriting, and then if the deal looks good, then make your offer, right? And if you get the offer accepted, then the next step would be due diligence. You know, here, the better you plan this out, the more you're leaning on somebody with experience to really help you through it, the better, right? The more well capitalized you're going to be for the deal, which nobody ever wants to find themselves needing more capital for renovations. Like, we've already got enough issues with interest rates rising and whatnot. We want to make sure it's well capitalized on this end. So you want to make sure you get a professional to check the major components, you know, your boilers, chillers, if you've got any of those, your electrical systems, your roofs, your foundation. I got a couple more items there, but you know, to do that, you can, once again, if your answer to do that is the property management company, please don't let that be the answer. And I love management companies. So yeah, there's third-party companies that do nothing but due diligence. There's also contractors like my company, you know, J&T will come out and do it. There's other contractors that would do it as well. And then just make sure that you set the expectation with them, like what exactly you're looking for. You don't want them to just go and look at the condition of the existing building and then give you a price to fix that. At the same time, you want them to quote your renovations. You know, give them your actual vision and your business plan of what you want to do, so they can quote both your deferred maintenance and your renovations. And then you want to walk every single unit. You want to make sure that you know what you're closing on, right? You know, a down unit versus just upgrading a unit, there's a big difference in price. So you want to make sure you actually, and it doesn't have to be just you, right? I mean, once again, you can hire somebody to do this. Just make sure whoever you hire is actually using software or giving you good data of this, right? And it's not, you're not just checking a box. Yeah. So as an example, we use a software when we do our DDs. Every single unit, like you can see at any time, you can go and see how many have been inspected, you know, what's the issue that's come up the most. I mean, there's like 20 different reports it spits out automatically. You got pictures of every unit, all organized into each unit. Same here. So you can see, you know, how many need backsplash, how many need cabinets, countertops, whatever it is. And then after your due diligence, once again, you're revisiting your CapEx scope of work and you're finalizing it, where you spit out a final scope of work. I don't know how many operators don't do this, but it's a good majority of them. You know, when J&T Construction gets called out to go give a bid, first thing we ask is, send us your scope of work. And most of the times we'll get like 2 sentences, or they'll expect us to build it. The right thing to do is build it yourself. Maybe you don't even have the right, I mean, you should have the right numbers if you hire somebody to do the due diligence and whatnot, but at least know the scope is the bare minimum. Yeah, so finalize the scope of work and the budget. And then, you know, your due diligence is your time to walk away too, right? So if you discover some serious issues, you know, I suggest you scope all the sewer lines. That could be a big one. And if in doing that you see a lot of issues, one, obviously you can go back to the seller and ask for a discount. If you do that, you know, all I ask is, or I suggest that you show proof, right? Give them actual estimates from contractors and whatnot. But if they don't want to give you a discount, and I mean, it's a major issue, you know, now would be the time to walk, but if you don't do proper due diligence, then you can end up closing on something that you shouldn't have, right? Yeah, that's good. So continuing down that path, let's say now we've closed. First thing we do is we set up a pre-construction meeting. We do this on every single one of our deals, where we get the ownership, we get the construction team, the property management, anybody that's going to be involved, essentially, all together, and we go through the CapEx scope of work, line item by line item. We go through the exact business plan. We go through, you know, not just pre-construction, we kind of mix it up too. We go through some of the rents that we're targeting, you know, essentially the entire business plan. And then, you know, some of the logistics, you know, we talk about storage and materials, where the dumpsters are going to go. We kind of just set up the entire project. And then that just allows for the project to go smooth and everybody to be on the same page. We work really close with the on-site management team, especially on the interior units. So like as we're finishing up the interior units, we have a tracker that's shared between, you know, everybody has it, but the on-site management and the construction team are on there daily, and that's how the units get leased. So, you know, we pre-lease these units, and they're ready to go because everybody's on the same page, which saves time and keeps them not vacant, right? All right, so finally, during construction, some of the things we do, you know, these storage containers. Every single one of our job sites has storage containers, and that's to not run into issues with the materials. You order bulk materials ahead of time, and then we keep them in the storage units to make sure that we're always one step ahead, right? It says dumpsters, you know, you get everything on site, right? You get the job site ready. So you got the storage units, the dumpsters, depending on what you're doing, if you need an office, construction office. We do weekly meetings. So what we usually do is we do a asset management meeting every week. So the first part of that, if we're doing a heavy value add, would be the construction part. So we'll start it off with construction. We use a project management software. So it's called Buildertrend, where we post daily logs, we post pictures, ownership, management, everybody gets it. So once again, there's communication, everybody's on the same page. Yeah, we definitely set up, we prioritize certain items right on the scope, and then we focus on what's going to happen first. You know, like usually when we close on a property, we want to make sure that our current residents are happy. So we focus a lot on security and you know, whether we're fixing gates or just making it known like, hey, there's new management. We actually care. You know, we're getting stuff done, and then we'll start possibly doing more cosmetic stuff on the exterior. So then that lets people on the outside know, hey, there's things going on. And then meanwhile, you know, at the same time fixing up those units, and it kind of just all comes together nicely. Change orders is an important one. You know, you want to make sure you've got a system for change orders. That can get out of control real quick if you don't. You want to make sure there's a system for approving them and tracking them. Lender draws. That's one that I think doesn't get talked a lot about, and a lot of operators fail there. So if none of you have dealt with lenders on CapEx draws, it's a pain. Like, you got to submit through their forms, and you got to submit it perfectly, and it's going to take weeks for them to actually go through it, then get the inspector out there, and then actually get the draw. So the better you have that worked out, the quicker you get your draws, the quicker you can get the project going. If not, you'll quickly fall behind on some of your invoicing and slow down your project. We do a lot of these once we're doing upgrades, where we post this in the leasing office, and it kind of just shows everybody what's coming. We even start getting some of the units, transfers, right? People wanting to transfer from their classic unit to the upgraded unit. start creating some buzz on the renovations. And I talked about the interior unit tracker, and then speed. Speed is everything when it comes to apartments. Okay, this is a bonus. I don't know, how am I doing on time? 6:50. Yeah, nobody's walked out yet, I don't think.
I think there are gonna be a lot of Q&A too.
Yeah, okay. So I'm not gonna go through every single one of this. Email me, you'll get this, but I pretty much go through what you should do to hire a GC, right? To hire a contractor, and what questions you should ask them, what they should give you. I feel like this is something that's rarely done, and it's kind of crazy, because I mean, on a lot of these projects, you're putting in $1 million to $10 million into a property, and hiring somebody to do it, you would think it would take more time before hiring them, but it doesn't always happen. That's more of that. This is some more tips on adding value. I'm not going to go through all of it. Maybe this one. Yeah, so I talked about making a dramatic change on the curb appeal. You know, a lot of the things we do is paint the exterior. As you can see, I mean, depending where you are, you can get pretty loud sometimes with that one, but you know, we felt it fit the demographic well there. We like painting the brick. We think it makes, you know, on these older properties, makes a big difference, modernizes it, and makes it stand out. A simple one we do that really changes the curb appeal is if it's asphalt parking lot, just resealing it and restriping it, which isn't crazy expensive. Solar screens, when you've got these older properties, you're essentially covering the old windows because it's expensive to replace them. But you know, there is some energy efficiency as well, and it looks a lot better. And obviously landscape, you know, we focus a lot on that, especially around where the path of somebody driving in and actually parking to go look at a unit. A lot of focus there. This is a list of books. I'm not going to go through those, but some recommended books. This is a deal here. You want to actually maybe talk about this one a little bit? Better book?
Yeah, so as we kind of expand from value add to the A-class deals, you guys saw watercolors, we just closed that earlier this year. George mentioned one of the best ways to add value is from the ground up, you know, getting involved from that aspect. So we're partnering up with Newell Development, really excited about the partnership on Mid-City Commons. It's actually like a mile down the road from here. It's right by the Northwest Arkansas Medical Center. So excellent location right between Bentonville and Rogers. So it's an amazing location to really get involved on the ground up development. So it's a really exciting opportunity. We're opening up to investors to get involved in that. You'll see on the slides, we're going to be doing a webinar next Tuesday on the development. So it's 236 units, 2 phases, 185 units and 51 units. The 185 unit, this one right here is the main one, which will house the leasing. We'll have some sort of restaurant concept there. Newell did it very well with the Howard, if you're familiar with that project in downtown Bentonville, where they had conifer in that. So I think it was just rated like Southern Magazine's one of the best places to eat in the South. So this concept, you know, you have a lot of working, busy professionals right here, so we'll probably do something more fast, you know, something more like a coffee bagel shop where people are on the go. So really excited about this partnership, the location, and being able to offer our investors a chance to get involved on the ground up. So if you guys are interested in more, you can go to our website, elevatecig.com/midcity, and that'll hook you up to the webinar. You can always reach out to George or myself to ask more questions there. So really excited about that project here.
Cool. Thank you, Brian. That's it. I'll take questions. I love Q&A.
Okay, so I know you said it's unlike residential where you have a single family. I know the market doesn't matter as far as value. But when you're talking about renovations and stuff, does the neighborhood not matter how much renovating you do to the property? Like the area and all of that, because I didn't hear anything on that.
Oh,
Like,
100%,
because
I
this
mean-
is easy around here, but like certain areas, there's only so much you can do to. And what do you do to bring the value up when you can't spend a lot on it because the neighborhood only gives you so much?
For sure, for sure.
Yeah.
So I mean, the rents are only one piece of it, right?
Sure.
And yeah, you've got to know your comparables, you've got to know what's around you, and you don't want to over renovate, right? Put more money in it and not have an ROI. So definitely, we do a lot of that. We do affordability tests.
Okay.
Like we don't want to think that we're going to get 1,500 in rent when nobody around us can afford it. So yeah, a lot goes into that, and then ways to. If you can only push it so much, I mean, there are other ways, more on the expense side. I mean, you can do maybe water conservation and save some expenses on your utilities. You can do just running a tighter ship on your expenses and more of a management play in a sense. You know, there's still, you got to be careful with the other income. If you can only push the rent so much, but you know, the internet. Most people have internet now anyways, right? That's a pretty safe bet that you can add that, a bulk package there and make some money.
Is there anything else you'd turn it into if you weren't gonna turn it into, like if you saw a property and you're like, okay, it has some kind of potential or something, do you do something else with it or just skip over it?
Meaning?
Like if you have a property but it's not renting well and you don't think you can invest in it a whole lot in that aspect, do you do something else with it or do you just not do the deal?
Not do the deal. Yeah.
On your existing structure projects, and Brian, feel free to chime in too, are you always working in listed properties or are y'all looking for off-market deals? Are y'all out scouring the earth like a lot of folks are out here? Or are y'all way past that now? Y'all are too fancy?
Yeah, I'd say I mean, you know, the partnership with Newell was, you know, off-market deal there.
Yeah, I mean, brokers make a lot of the introductions a lot of times because they're in the weeds, right, and they know a lot of the, but I mean, it doesn't have to be listed with a broker. A lot of the stuff we've been doing is off-market as of late.
We've made an offer every week since January, at least one offer every week on multifamily project, and this mid-city project's our third deal of the year, so.
In the beginning, we were doing direct mail, we were doing cold calling. We landed our second deal that way through cold calling. But we learned with the bigger units, it's a little harder. And the direct mail, I didn't see that much success with it. Yeah.
Your construction company, so you said you guys travel everywhere. Is that just a means to an end for you all? So that you guys are doing it and you're controlling the costs and everything? Because my company has traveled a lot and it's not usually what you're successful in doing, right? You're not going to New Jersey and making money when you guys are pricing here or whatever. So is that just, I guess, how do you go everywhere? Are you guys set up? Where are you based out of? Do you guys just sub everything?
Yeah, no, great questions.
Sorry.
So no, but it's good. So yeah, the construction arm and the management arm were tools to accelerate, elevate, right?
Okay.
But in doing that, you know, we've also decided to take on third-party clients.
Okay.
And we will travel anywhere, but the project has got to be big enough
Okay, sure.
where it is profitable.
Sure.
Because yeah, I mean,
We say that too.
we
For the
say that,
right
and I mean
client,
we stick
will
to
go
it. No.
Yeah, no, I know.
Oh, okay.
Yeah.
So yeah, usually it depends on the project. There's a lot of variance, but
Sure.
I mean, you know, over $1 million, I can say yes, pretty
Sure.
much. But there might be stuff under that makes sense too.
Okay.
As long as it's not a lot of interior units, we're happy.
Yeah.
So I have a question. So when you're breaking into a new market, like right now you're established in those markets now, but when you're breaking into the new markets, how do you approach the construction management piece? Because, you know, you're working with a different city and the codes and et cetera can be different. Because I've seen multifamily investors got burnt thinking that the city is very similar to that city being, you know, an hour or two away, et cetera.
Right. So we've got national suppliers for materials. So I mean, our material price doesn't change from city to city, state to state. Our labor, a lot of it comes from Dallas or Houston, so our pricing on that end stays the same as well, because they'll travel to wherever we need to go. For the most part, you know, there'll be sometimes, depending on what we're doing, obviously if they gotta be licensed trades, then they've gotta have a local license to that trade. But other than that, I mean, that's, and then as we go, like, you know, we did a project in South Carolina, and, or maybe it was the Augusta one. Was it the Augusta one?
Which one are you talking about?
Well, we brought our crews, and then eventually we ended up getting some local crews, kind of switching them out. I mean, we've done that pretty much a lot of different markets. I'm talking to Saul back there, by the way. He's,
Yeah, oh,
we're
yeah.
J&T Construction.
No, but I feel you.
Okay.
We take local groups.
so yeah.
Yeah.
We'll take our crews, and then as we go and grow in that market, you know, we may end up swapping them out for some local ones or whatnot.
Do you guys hold construction licenses in most states? Okay.
Yeah.
So your
Just
local
not
guys are,
California.
sorry, so your local guys, you are beating some of your project local guys' prices. Yeah.
Some of-
It's like if you're bringing guys from Dallas up here, they're beating some of the local guys' prices up here.
Yeah, usually, yeah.
Yeah.
Yeah, I mean, they trust us, they've been with us for a long time. Prices in Texas are cheaper overall.
Yeah.
So.
This might be super in the weeds, but how do you navigate, like for instance, in Texas, you don't have to have workers' comp, but in Arkansas, you usually do, right? Even for contractors. So how do you navigate that from state to state?
Yeah, it sucks.
Yeah, okay. Well, maybe we'll talk in private.
Yeah, so I mean,
Yeah.
our insurance is changing constantly, depending on what we're doing projects.
Well, my
or
family
who we're
owns-
doing them for.
Well, my family owns a commercial roofing business in Texas that's gangbusters. And then like whenever.
Yeah, in Texas, you don't need a license and you don't need
Yeah.
any insurance. No.
And so anytime
It's-
the discussion has happened, like, I have now a bunch of my family's moved here, right? And they talked about starting, because they don't want to deal with the workers' comp, and they can send their crew up here and, you know, drop of a hat, but they don't want to have to deal with the waivers and all of that.
Yeah, I mean, even getting licensed here was fun. Let's
Yeah.
put it that way. But-
Yeah.
Try
Good question.
Virginia.
Huh?
Try Virginia.
Virginia? No, I don't want to.
No, you don't. I was thinking that.
Any other questions?
I'll leave you.
Do you watch out for economic indicators like interest rates going up, going down,
For sure.
exchange rates,
Yeah, I mean, it's,
fuel prices?
yeah, constantly watching them,
So
just praying.
what if you make a mistake, you buy it and then interest rates goes up, you can't sell it at the low cap rate or the same cap rate? You just hold.
Yeah, I mean, you gotta adjust, constantly adjust. I mean, for the 17 years I've been doing this, real estate keeps you on your toes, for sure. And you know, as you go along, like, so I went through 2008, started seeing some of those signals coming, you know, we exited some of our properties earlier, for that very reason, refinanced some of them for that very reason. But yeah, I mean, nobody expected the interest rates to go up that fast, that's for sure.
You also have deals where you make it easier to do 1031 for your investors.
Always, yeah. If it's early enough on the deal, we take 1031. Usually we say about $1 million, depending on the size of the deal. I guess if it's a smaller deal, maybe smaller. But yeah, we have no problem setting it up from the beginning. I think somebody else was. Yeah.
Where are you finding the type of returns that you're enjoying best right now? Ground up development or purchasing and owning and holding for, I don't know how long you hold it for, Class A, Class B, multifamily?
It's a good question. the ground up, I almost put it on its own little pedestal, or kind of, not pedestal, but just because it's different than your existing, we know for 2 years we're not going to see any cash flow.
Right.
That's the type of deal. But we are seeing opportunities in the ground up just because it's becoming harder and harder for developers to execute, because the debt is lower leverage.
Yep.
They got to raise more equity now. So we feel there's opportunity there. As far as returns, like quicker returns for our investors and whatnot, we've had really good success with the A-class properties that we essentially buy straight from the developers, and they've got large loss to lease, and we can easily come in and capture that
Yeah.
without having to do too much work.
Are you getting large enough additional returns by doing the development because it's so hard? Or is that just harder?
We feel like we will.
Okay.
Like we're very conservative
Yeah.
on our projections, so maybe on paper it might look somewhat similar,
Okay.
but in the back of our mind, we're
There's a little more gravy there.
Yeah.
Yeah.
That's it. All right. That's good stuff. Thank you, guys.
So yeah, I think we're good here for until 7:30. And in terms of, we just want to really appreciate George for coming here and speak. I know you visit here every so often, and for this meetup, we have it monthly. Not next topic is not defined yet, but likely along the lines of ISA protections with tax planning as we're getting closer to the
That's a good
for
timing.
taxes for next year. But if there's any other topics you think could be interesting, feel free to send me or Brian a note. We'll be having on second Tuesday of the month, so second Tuesday in October, second Tuesday in November, December, so on and so forth. Outside of that, if you know anyone that's interested in sponsoring the event, let us know. We do have a lot of great social media presence and also great folks here that you can get impressions on as well. Anything else you want to cover before we open up?
I have one thing. If you have questions, more questions about construction, go see Saul. He's a wealth of knowledge over there.
Awesome.
You have something else?
Yeah, I appreciate you guys coming out. This is our 12-month anniversary, so we're looking to continue to grow this, have more and more speakers, and really grow this commercial real estate community in Northwest Arkansas. So really look forward to, hopefully we added some value here and continue to add value. So looking forward to finishing off the year with these last couple meetups.
Cool. Thank you guys. Feel free to hang out for a few more minutes. I think we just need to be out by 7:30, right? Is that correct?
Yeah.
Okay. Awesome. Thank you, Bree.
Yeah. Thanks for coming, everybody.